Hello, hello, by design family. I hope that all of you are doing more than great. I think all of you realized, but today we have an amazing guest in the room with us. Family, today is amazing. It's a very special day. It's a very exclusive day because what I always say is that if you have to learn something, make sure that you learn it from someone with experience and results. And today's guest has both of these characteristics and more. So be sure to tell everyone, everybody in your team, anybody else that you can think of, your family, your neighbor, your dog, your cat, everybody that you can think of, because today's session is absolutely unmissable. You cannot miss it for the world. Okay, so this whole week we've been learning about an amazing tool called Pip Grabber. This tool is designed so that you guys can win, so that you can get results and earn money in the trading market. If you don't have a lot of time or a lot of experience, or if you just want to see the results that the By Design family is already having. So the person that we have connected with us today is not only an expert on the subject, not only an expert on the Forex market, not only the director of trading in MTI, but also he is the person that created the amazing tool that is Pip Grabber. Now, it's not very often that you guys get to learn from the expert. For example, Bill Gates teaching you about Microsoft, or Elon Musk teaching you about Tesla. So something like that is what we have today. So let's go ahead and make sure that we take advantage of our time today with Gary Fichardt, Director of Trading in MTI, because his time is very limited. He has blocked out time from his agenda to help us. So let's go ahead and make sure that we have as many people connected as we can. Because if what you want is to take not only your trading, your business, but your life in general to the next level, you have to listen from Gary Fichardt. He's going to be sharing some very important points, like, for example, why he created Pip Grabber the way that he created it. Why do we have these 5 pairs in Pip Grabber? And something very important, which is risk management and tolerance. And finally, the strategy in which Pip Grabber is based on, so that you not only have amazing results, but that you also understand the amazing results that you are having. So, Mr. Gary, we have around 170 people connected, and they continue to join. So, once again, thank you so much for your time. All of By Design family is very anxious to listen to you. So, Gary Fichardt, the room is yours.
All righty. Well, thank you, Mateo, and I do appreciate it. Thank you for the introduction. And I'm glad to be here. Yes, as Mateo says, I actually took off the last 3 days, so I'm actually on vacation right now. Yes, this is the way I look when I'm on vacation. But when Mateo actually reached out to me and said to me, Gary, would you like to go ahead and join him in on the session? I said, why not? Because you know what? I'm so passionate about the strategy because it's doing so well and it's doing so great for other traders. So, just to, before we go into the charts and go ahead and take a look at everything, I think it's important for you to understand the background and how I got into the Pip Grabber and why I got into the Pip Grabber. And so let me start off with this. Once upon a time, no, I'm just kidding. I'm not going to get that long. So what I'm going to do is I'm going to say this. I started off as actually a intraday trader, then moved into scalping. So my first experience with trading was really to scalp the market and try to capture quick profits out of the market very quickly. And I felt as I got better and better at that, I felt that I could take on more money, and I did. I managed up to $30 million in funds. The problem is when you trading short term and you scalp in the market, you got to trade with big lot sizes. And so trading a $30 million portfolio, I would be trading with 2,000 standard lots at a time. All right. Now, this is not micro lots. This is not mini lots. This is standard lots at the time. And when I started trading back in the day, We didn't have the option of mini and micro lots. It was standard lots. We had to trade standard lots. And so I traded 2,000 standard lots at a time. That at times the broker would call me up and tell me, Gary, you got to call this in. You can't make these trades over the software. That I had to actually call in and place these trades on the phone, because the amount of positions that I was taking, I was moving the market 10, 15 pips. The market would actually bump up 10, 15 pips in a direction because of the volume that I would be trading. And so we had to go ahead and trade this in tranches, pieces of the orders. To a point, I got so frustrated with that because it would take me up to 15 minutes to actually get into a trade and about 15 minutes to get out of a trade. Now, if you're a scalper, you know how important time is. You want to be in and out of the market very quickly. And so what I did is I decided that I'm going to move away from scalping. And as I started learning about swing trading and started understanding what do I need to do, and it was really tough for me because as a swing trader, you have to be able to trust the market and let the market swings play out. But as a scalper, you're anxious. You're always taking profits quickly, right? Because you're worried the market's going to turn against you, and you don't want that to happen. And so this is how the Pip Grabber actually originated. Because now what I wanted to do is I wanted to look for something that I could do, that I could trade not just intraday scalping, but I could also do some position trading setups. And so what I started looking at is different types of strategies. How can I get into the market and trade different levels, position myself into the market instead of looking for scalp trades, and instead of trying to look for these swing trades and trading these swings, how can I get into the market and meet both desires? And so I came up with the Pip Grabber trading strategy. Now, the one thing that I know that's come up a lot of times is, Big Dog, where's the stop loss? Where we can take our losses? Well, the thing here is, the reason why I've chosen the pairs that I've chosen, the reason why I've chosen the strategy that I've chosen, is because in some way they hedge each other. Which means if we do have a certain pair that does move in a direction, we have other pairs that are going to be profiting all the time. And so, yes, it is important that you go ahead and you manage your risk so that you can be active in all of the positions that we go ahead and send out. So all of the trades that we send out, it's important to be successful in what we do and to have the results that we have. You have to be consistent with what you trade and how you trade. And so the consistency is important in order to be successful. Just keep that down. If you write things down, write that down. In order for me to be successful in trading, I have to be able to be consistent in trading. And so that's your number one thing, is to be consistent. The other thing that is important right here is that when we are trading the market, all right, when we trade in the market, we have to realize that not only consistency is important, but we have to be able to manage our risk properly as well. So we need consistency, and we need to be able to be good managers and good stewards of our capital, right? And so the Pip Grabber trading strategy is not just a simple, easy strategy to follow. All right, it is. It really is. I mean, it doesn't take an Einstein to understand how to trade the Pip Grabber trading strategy. But what it really comes back down to is the big part of it is how do I manage my risk and how can I be consistent? Because that's ultimately what's going to make you successful. So let's go into, I'm going to go ahead and share my screen, and let's go into a couple of things here that you need to know about trading, and you need to know about the Pip Grabber trading strategy. So firstly, number one, let me go ahead and start off by saying this. And let me just get this off the chart right here so we can clear it up. All right, there we go. So the first thing you have to know is it doesn't matter what time frame you're trading. All right, it doesn't matter if you're going to be following the signals that we're going to be sending out to you. All right, if you go ahead and you are a Smart Market Academy student, and you are accessing the Pip Grabber trade signals, then keep in mind that those trade signals that are coming through, it doesn't matter what time frame you're on if you want to go ahead and implement. If you're going to follow that just on your own, it doesn't matter what time frame. Now, I do run a trading show, and it's on YouTube, and it's called the Pip Grabber Trading Show. Surprise, but it's called the Pip Grabber Trading Show, where I actually place manual trades. So I want you to go ahead and write this down too. Write down FXBigDog YouTube channel, right? You got to subscribe to my YouTube channel because in the YouTube channel, I go through the actual manual process of when we actually, in the live market, we did one just this morning, and we placed 4 trades this morning. And what I do is I go through the manual process. If I want to take the trade signals and I want to go ahead and implement the trade signals in my live trading account, and I do this in the live market. We've made over, I think we're about 4% up this month. We've captured about 800 pips. We're doing pretty solid. Now that's not even the trade copy. That is just the manual trade signals. So I want you to understand that what you're getting here is a very successful and thought out process that we apply in the market. And so let me go ahead and just start off by explaining you what the strategy is, and then I'm going to go to some results. All right, and then I'm going to go ahead and talk about a little bit more about the strategy itself. So let's jump into the actual strategy. So the strategy is this simple. All right, all we're looking for is to, first number one, is to follow the trade signals that come through, because those trade signals are, we are trading live, and I'm implementing them on my own trade copy. So these are the signals that you're getting, that I'm doing, and this is money that I'm managing as well. So trust me, the signals that you're seeing is because I'm following them myself in a live trading environment, in a live account. And so this is what you got to do. When the trade signal comes through, all you got to do is trade it in that direction. So if the trade signal, and let's go ahead and take a look at an example right here. If I go ahead and pull up the latest trade signal right here, the latest trade signal we had right here was to buy the Canadian Swiss at 73.40, right? So there it is. That's the trade signal right here, to buy the Canadian Swiss at 73.40. So if I go to the Canadian Swiss right here, and I go ahead, and I believe I've got it open on one of these pairs. Here we go. Yes, CAD Swiss here. So if I open up the Canadian Swiss right here, and let me just go ahead and move that out the way. And I'll look at the price that it tells me to go ahead and enter. Where's the price? It says there I need to buy at 73.40, right? 73.40. So let's go take a look right here. So what you're going to do is you're going to take the signal. The signal is going to say buy Canadian Swiss at 73.40. That's all the information you need. Again, it doesn't matter what time frame you're going to go to. It doesn't matter, because all you're going to do is just follow the direction, right? And so it says buy. And so 73.40 is right here. In fact, I think price is trading right there at it right now. Yep, 73.40. There it is. So right now, if you want to follow the signal, all right, then what you're going to do is you're going to buy at the current market price, because the current market price is exactly where it is, at 73.40. Now, if you're buying here, what we're going to be doing is we're going to chase after a 20 pip profit. That's it. We're looking for a 20 pip profit. But because the market is volatile, because we have volatile movement in the market, what we want to do is we want to be able to enter multiple places. And so what we'll do is we'll go ahead and enter, and we'll enter not only here, but it will enter 25 pips below that again. So if the market does drop back down south, we're going to go ahead and enter down. Now, listen, I want to make sure that something's clear here. The reason why we are buying is because I'm anticipating price to move north. Now, if I'm wrong, then that's okay, because especially if it's my first entry point, because I will have a second entry point down here. And if the market continues to move down, I'll have a third entry point here. And I will continue to buy, because I believe the direction is going to be long. I will continue to buy until I see that there might be a reversal. And if there's a reversal, then what I'll be looking for is a possible way to get out of the market. Now, again, all you have to know is that you'll be entering on the buy, and you will place 25 pips apart from each other, and you look for new buys. All right, you look for new buys, and this is how you can go ahead and implement it. If you go to smarttrader.com and you go ahead and you open up a chart on the CAD Swiss pair, and you right click on the chart, you'll see it's down here below. It says here add matrix. If you click onto the add matrix right here, it's going to give you a tool that you can go ahead and simply go ahead and add in your position. So what you'll do is this. You'll go ahead and choose whether you want to have pending or stealth orders. This just means, do you want your orders sent to the broker? If that's yes, then it'll be pending. I like to use stealth orders, which hides my orders from the broker. Then what you want to do here is you want to go ahead and say number of levels. Go ahead and max it. Max it out and say 10 levels. All right? Because if it only picks up 2 and it profits, it's going to close all those orders out in any case. So it doesn't really matter. So go with 10, max 10. Now, you got to work out your lot sizes. Now, this is a question I know a lot of traders have asked me. How do I manage my risk on the trade? So I'm going to go ahead and put a suggestion out there, okay? If I was to manage my account using this strategy, then what I would be doing is, if I trade all the signals that come out, I would be looking to trade, if I was here in the US, I would be looking to trade with 1 micro lot for every $1,000 I have in my trading account. So which means that every entry point that I enter, I would be trading with a 0.01 lot size if I had a $1,000 trading account. Now, if you want to be conservative, you say, well, Big Dog, you know, I want to be a little bit conservative. I don't want to be too risky. Then you could very much simplify it by saying, just every $2,000 you have in your trading account, trade with 1 micro lot. So what you've done is you've just gone ahead and reduced your risk by 100%. All right. So all you got to do is say, I'm going to go ahead and you reduce your risk by 50%. So all I'm going to do is I'm going to trade with either $1,000, one micro lot for every $1,000 I have in my balance on my account, or you go ahead and say I'm going to trade with $2,000 with every $1,000 that I have in my trading account. Okay, and that's how you're going to measure it. It's that simple. It's not complicated. I got just the other day someone saying, hey, could you just send me a breakdown of how can I manage my risk based on my portfolio? I'm like, are you kidding me? Are you kidding me? I'm just kidding. No, all you got to do is it's $1,000 for, or at least 1 micro lot for every $1,000 you have in your trading account. And if you really want to be conservative, it's $2,000 in your trading account, and then you'll trade 1 micro lot as well. Okay. Now, once I go ahead and decide, okay, my lot sizes, I know my account balances, I'm going to go ahead and put my lot sizes in right here. Then what I'm going to do is I'm going to say distance between levels is going to be 25 pips right there. Now, if I'm going to be buying, then my stealth orders must be below the market, not above the market, because it needs to be below, because if I enter on a buy here, I want my other orders to be below the market right here. So it needs to be, your stealth orders need to be below the market if you are buying. Okay. Now, if you go ahead and enter on a buy, you'll have a choice here to go ahead and choose your trading account right here. Right. Choose whatever trading account you want. You'll obviously have to connect your trading account to Smart Trader in order to do that. And you will get in at market. You will activate this order in at market. Now, this is where it comes right here. See where it says close all orders on net? You want to go ahead and check that, and you want to go ahead and put 20. You want to close out your orders on a net 20 pip profit. So as soon as the market moves into a 20 pip profit, you want to close your orders. Doesn't matter if you've got 5 orders in, 1 order in, 10 order in, you want to close out when you get to a 20 pip net profit. That's important, because sometimes when you get in and suddenly you've got 5 orders in and now the market starts taking off, it's very easy to get greedy. It's very easy for the greed factor to kick in, and for you now to say, well, you know what, maybe I can get another 20 out of this. Maybe I can get another 15 out of this. Only for the market to come back and turn around against you. And now you're down 15 or 20 pips, and you're like, if I'd only taken my profit. It's happened to me more often than not. And I never want to be that guy. You don't want to be that guy or lady either, where you sit back and go, I should have. If I had done this, if I had done that. Don't do that, okay? So go ahead and set it to a 20 pip net profit, and take your profits when it hits that 20 pip net profit. Don't be greedy, okay? Now, where is the stop and limit? You'll notice we don't use stops and limits, okay? I don't use it. With this strategy, I don't use the stops and limits. So that's why it's important, the amount of risk that we're applying, that we keep the risk low. And that's why I said a suggestion is one micro lot for every $1,000. That should keep you in check. But to be more conservative, if you go $2,000 For every $2,000 you have in your trading account, trade with one micro lot. You should be good to go. Now that's a trader that's trading with a leverage of 1 to 50, like here in the US. But if you've got an account that's European account that's got a leveraging of 1 to 15, or 1,500, 1 to 1,500, or 1 to 200, or 1 to 500, then you're not going to have a problem with leverage, right? You're not going to have a problem with leverage. So trading with one micro lot for every $1,000 in your trading account, you should be good with margin and should never run into any issues. Okay. Now I want to be able to make sure that this is a disclaimer that everyone pays attention to. You are the manager of your own trading account. What I say is something that I'm just suggesting that I would do, but you have to still do your own research and make sure that, hey, whatever you're risking on your account, it's not because Gary said I must do it. It's because that's what you're comfortable doing. And that's what you've accepted as your risk tolerance. Remember, it's on you to make sure that you're responsible for your own decisions and your own way of, or the way you've managed the risk on your portfolio. Very important that you note that. Now, let's get into a couple of things, and I'm going to go back into the trading right here, but let's go into a couple of things here based on how successful is the strategy. How successful? Because listen, traders, before you invest in anything, don't you want a track record, knowing that what I'm getting involved in is actually making money and is actually showing some success? Well, just so that you know, this is my own live account that I run my trade copier on, and you can see right here, this is the results that we have so far. We have made 106% over the last year. We've closed out, all right, this is from the beginning of the year. We've closed out with 15,600 pips already this year. Do you think the strategy is successful or not? Damn straight, right? Now, take a look right here. These are the pips being generated on a month-to-month basis. You can see there we were 800 to 2,000, another 2,000, another 1,200, another 600, another 1,100, 2,000, 1,600, 1,500, 1,000 last month. This month we're already up 1,000 pips already this month, and we still got a week to go. So we're absolutely killing it on the strategy. It's doing that well. So rest assured, when you go ahead and you place these trades and you follow the rules that I've set ahead, and you keep a good sense of equity management on your trade, if you can maintain good equity management in your account and don't get over greedy, because I've got traders that have gone and got really wild, really crazy, because this is such a good strategy and such a successful strategy that they go ahead and over leverage because they get greedy. They want to get quick profits fast. And what ends up happening is they end up losing. Now, I'm going to go ahead and show you something that I've never shown anyone before. And I'm going to show you someone that an individual came to me and said, Big Dog, I'm losing. I've lost so much money in my account. What can the Pip Grabber Trader strategy do for me for a $300 trading account? So I said, you know what? Let me do this. I'm going to do this just because I want to show everyone that the Pip Grabber trading strategy can work no matter what size account you have. You've just got to manage the risk properly. And yeah, we have a trader. Man, this guy has had his days. Look at this right here. If you take a look at this person here, look at this person. He's lost 96% of his account for the year. He's having a bad day. No, he's having a bad hair day. In fact, the whole year. So he's not doing very well. But look, as he started working with me and we started putting the Pip Grabber trading strategy to work, take a look at the results we've had this month, because that's when we started. This month, in fact, I believe we started actually, let's go take a look right here. We started this, take a look here, June, my bad, not in this month, but in June. Take a look when we started doing this with him. I started work with him. This is where he approached me. He's like, he really had a bad day. I mean, he's had a really bad month. It started off okay, but it just went south for him. And so as we go ahead and went and worked on this thing, take a look what we did. We made 99% in the first month, 60% in the second month, 55% in the third month. And now we're in this month, 28%, because I told him, listen here, dude, you got to start reducing your risk, because he started getting really aggressive. I said, listen here, you've just come out of big losses. What are you doing? Stop getting greedy. Let's keep this slow. All right. Let's build this account slow and stop getting greedy. And so we're going to do this. We're going to continue to build this up. And this started on a $300 trading account, my friends, $300. And when we building this up, and we'll see where it gets to, and hopefully we can build it up to $50,000 eventually over time. But this is where it is. There's got to be a starting point. So remember this. The strategy is a simple strategy. But the important parts of these two of the strategy is, number one, good equity management on your trades. Absolutely. You've got to be able to be good at that. All right. Number two, consistent. Don't be that trader that gets started with it, enters at the first trade, enters at the second trade, enters at the third trade, and suddenly the market's going to go ahead and move further down south, and now suddenly you get cold feet. All right. And now you're like, oh, no, I can't put more in. I can't do that. Listen here, if you commit yourself from the first trade, if you say I'm in on the first trade, then you're in, and you got to follow through with the strategy. And if you've gone ahead and over leveraged your account that you can't place more trades, then that's on you. All right. Because I'm telling you up front, you got to be good at that. All right. Don't be greedy and add on and become that trader that gets so greedy that they over leverage their positions, so that if they over leverage their positions, they will never be able to fulfill or complete the actual trading strategy. So if you want to make profit, make sure that you don't over leverage and you trade consistently. All right. Because that's going to help you be successful. So once again, here's a CAD Swiss trade. The Pip Grabber trade signal said that we had to go ahead and buy. Here it is here. It says buy at 73.40. All right. 73.40. There's the first entry point. So 25 pips below that would put us in at another entry point down here. Let's see. Where is it? Oh, it's down, all the way down here. So you can see it's pretty spaced out right here. So that'll be our next entry point right about here. All right. So that'll be our next entry point. So if I go ahead and compress this a little, just so you can see, let's go to a 1 hour time frame. Again, doesn't matter what time frame, but there's the 1 hour. All right. So you'll enter here. That'll be your buy. Okay. And then you'll go ahead and you'll enter. So you're entering there. You're entering down here. And then if the market goes down another 25 pips, you'll go ahead and enter there if that's going to be there. And you'll enter there as well. And you'll keep doing this until we get our 25 pips profit. Now, that's following the trade signals to the T. So as soon as the trade signal comes through and you get your trade signal, you go ahead and place your trade. But let's go ahead and talk about like just something we're doing inside the Pip Grabber Show, my YouTube channel. Once again, just search in the name FXBigDog and you'll find me. But in my YouTube channel, we go ahead and I think I showed you right here. We've actually gone ahead and there was the one that we just did recently. So if you go to the YouTube channel and let's say you were trying to trade this manually, what I normally do is in my manual trades, all right? In my manual trades, what I normally do is I do look at a little bit more technical analysis. So I do apply more of an advanced technical analysis before I place a trade. And so a lot of times when I see the trade signal come up and the trade signal says that we need to buy a certain currency pair, like this one right here on the CAD Swiss, if it says buy, sometimes what I would do is I'd go ahead and say, hold on, does it make sense for me to buy now or should I wait? So this is for traders that are a little more experienced or want to add a little bit more technical analysis to the system. They can go ahead and do what I do, and I go ahead and start analyzing the market and say, hey, you know what? The market did move down, went up. It's failing to break down right here. So there's a good chance that price is going to move back up to this level right here. So that means that this is a good place to start looking to buy and chase after that level. Makes sense. Let's go ahead and buy. You know, that may not be too technical, but at least I've used some technical reasoning behind why I'm getting on that trade. All right. And sometimes I've even gone to a point where I said, I'm not happy with that entry point. I might wait for the market to drop maybe 10, 15 pips, and then I'll enter on the next entry point. And that's okay. You can do that. But what the trade signal is doing for you, and the trade and the signals that you're receiving, it's giving you what's important for a trader. It's giving you the currency pair. It's giving you the direction, all right? And it's telling you where we're going to take our profit, basically on 20 pip net profit. So you already should know in your mind, if that signal comes through, that you know that we're chasing after a 20 pip grab. We may enter multiple entry points, but still we're looking for a net 20 pip profit overall. And again, this trading strategy has done that consistently. As you take a look over here, look at the results right here. Here's the results you're seeing right here. And you'll notice that we do have some that says, oh, 17, oh, wait, hang on. This is minus 1.7 pips. Hold on a second, Gary. You say we take 22 pips. Well, that's because we had two positions in. You see, we had the Aussie CAD, two buys in here, and we closed out one with 22 pips, and the other one was minus 1 or 2 pips. Okay, so that'll be a net positive of 20 pips. Now, let me go ahead and throw another one out here. New Zealand CAD, this is only 7 pips. Why did we take only 7 pips on that trade? Well, actually, this is trading. And what happened in that trade, we were actually slipped. The broker slipped us on that trade. So we would have taken 20, but because of the slippage, we ended up taking only 7 pips out of the trade. Doesn't happen often, but when it does happen, it happens. Okay, and that was happening because we traded that over the over the rollover time, which is 5 p.m. Eastern Standard Time. All right, maybe I'm getting too far into the weeds on that, but that's okay. Just know that that can happen. All right, but most of the time, you'll see right here, if you look at the trade results, you will see a lot of this showing 20 net pip profits. Now you're looking at this one and you go, look at the CAD Swiss. You picked up 72 pips in that trade. Yeah, that's because we had a bunch of trades and we took some losers right here. Look at those losers. But overall, we ended up taking a net 20 pip profit. So don't be fooled by that. We're always taking a net 20 pip profit. And you'll see it throughout my trading results. You'll see it exactly the same all the time, consistently. And that's important for you to note right here. So traders, continue to follow the trade signals. Continue to be consistent with the signals. Trade it like this is the right direction. Trade it like you need to continue to be consistent with it by entering multiple entries. Trade it like if it goes wrong, you've got good equity management on your trades to ride the wave out and then still net profit. If you can do that, you will find success in your trading. All right, and I'm going to go ahead, Mateo, if there's any questions, I'm going to go ahead and address those questions. If there's anything else that you want to go ahead and ask me to go ahead and address, I can go ahead and do that right now.
Wow, Gary, thanks a lot for that training. I mean, I am super excited just by hearing, everything you're saying, and I know that people is tremendously excited as well. I know that people is asking a lot about the, euro dollar right now because it's going, down. So people want to know, like, hey, is it okay? Should I wait? Should I, lose my mind? I mean, they're just they just want to know what's your view on that.
Okay. So let's go here to the trade copy right here, and let's go to the results, the exposure right here. Okay, so here's our exposure. When was this last updated? An hour ago. Okay, good. All right, so here's our exposure on the euro US dollar. So these are all our trades that we have on the euro US dollar right here. So we have a bunch of trades in, and our break-even point is at 13.93. 13.93. There's a very good chance we might even get out of break-even on this trade. But let's go take a look at the euro US dollar, because that's a good question that you've just asked there. Because when traders go ahead and say, oh my gosh, I'm worried about this trade, well, just go back to the technicals. And that's why I always say to them, come to my YouTube channel, check it out, because I talk about these things that'll help these traders feel a little bit more comfortable with what's going on. And the great thing as well is I am going to release a Spanish YouTube channel too that's going to be talking about this as well, to be able to help those traders that are following the strategy religiously as well. So they can go ahead and we'll update inside that YouTube channel, and it will be in Spanish as well. But let's just take a quick look over here and take a quick look at the euro US dollar. So if I go to the euro US dollar right here, let's open up euro US dollar. And let's take a look at the setup In fact, let me just do this one right here. All right, so let's go to Euro US dollar. So the first thing right here is why I'm excited about the Euro US dollar. Let's go to a 4-hour time frame. Take a look at the 4-hour. Okay. And if you look at the last move on the 4-hour, right, what did we have here? We had price that came from that high to this low right here. And then at that low, we had a retracement move, right? Price went ahead and retraced right here. And now it's fallen all the way back to my 1.618. So now what do we expect when the market hits a 1.618? We expect the market to bounce, because that's what the market does. Market goes like this and it waves. And if you follow me in my trading rooms and in the trading rooms, I talk about this. In the YouTube channel, I talk about this. But when the market goes here and waves like this, then what we are expecting is the market to turn at these turning points. Here we would be bullish, here we'd be bearish, here we'd be bullish, and here we'd be bearish, and then now we'd be bullish down here as well. So what's happening right here is we're at a good support level. So we're expecting price to go up. Even if it's short term, that's fine. And it could possibly go ahead and retest that level there. That's at about 1.1520. So where's our break-even point? Our break-even point is at 13.93. So if the market goes to 15.20, are we going to make profit? Yes, we are, because we are buying. So we will make profit. But you'll notice that we were consistent on our entries. We were entering multiple times because we're expected price to bounce back. We just couldn't find the exact turning point yet. And so now we found it. And so now we are still locked and loaded. And so what I'm going to do here is I'm going to go now just the same way I used this analysis on here. All right. I'm going to go ahead and look at my 15-minute time frame, because now, and this is what you got to do. You mentioned a very important question here, Mateo, and you said that the euro is going down. Did you say that the euro is going down?
Yeah, right.
Okay, so that's a perspective based on the time frame that you're looking at. If you look at the 4-hour time frame, euro is going down. But if I go to the 15-minute time frame and I look at the short-term move on that, now my perspective is different, because now what am I looking at? I'm looking at the euro, and what is how do I, oh, hang on, oh, there we go. Now I'm looking at the euro, okay, trending up. So again, it's all perspective. What you think the euro is doing is perspective, and it's based on the time frame that you're looking at and how much data you're looking at. So right now, if I was a trader that was bullish, I'd be getting pretty excited. If you were a trader that was selling, you'd say, all right, well, this is a correction. I'm going to just hold on to the trade. So now what I'm going to do is here. Take a look right here. Here is a wave going up. Okay. So price is coming up to this level right here. So what am I expecting? I'm expecting that the market's going to find a bit of resistance here, and then we're going to get into a smaller retracement. So I've got to prepare myself. But what's going to happen is it's going to position us for the next move. So the next move is going to be this. Price is going to go ahead, because the market waves. Price is going to do this. It's going to retrace. It may come down to the 2.3. It may even come down to the 38% right here. So we might go ahead and retest 13.42, and then it's going to start turning around and start heading back up north again. And when it does that, we can look for the next target on this to be up here. This is my next target. It's at 13.95. So price is going to move to 13.95. Now, this is the big thing. Depending, of course, how many positions you have. Remember, we are chasing after how many pips? 20 pips, right? And that's 20 pips on if I entered one entry point. Now, if the market goes further down south and I pick up another trade, now I've got 2 entry points, right? So what is my target then going to really be? It's going to be 10 pips, isn't it? 10 pips times 2 trades. So then I'm looking for 10 pips times 2 trades. You see how that? So what it basically boils down is, if I have 5 trades in, then I'm just really trying to make profit just above the break-even point right here, where I might be taking maybe 2 pip profit above my break-even, but that 2 pips times that by 5 position gives me, actually no, it'll be 4 pips. 4 pips times my 5 positions will give me a net positive of 20 pips. So it gets tighter and tighter how much profit I'm looking at based on my entry, my break-even point. Because when I enter my first trade, my break-even point is at my first entry. When I enter with 2 trades, my break-even point is halfway between the 2 entries. Now I'm only looking for a 10% profit. And so that's how this system has been built, that it can allow us to see a bit of drawdown, but then still make profit to the upside. So as we come back up here, as we look at this final dip and then this rally, we're going to take profit. So those traders that are in on the euro US dollar that are worried about it, the only time you need to be worried about it if you didn't have good equity management. If you're managing your risk properly and you're managing your risk correctly, then you shouldn't have a problem waiting for it to go ahead and profit on it. Okay?
That was a perfect answer. Thank you, Mr. Gary.
It was a long answer, and I apologize, but I don't have short answers.
All right, great. There's another very big, very good question from Lucas. So he's asking, in these kind of long operations like the one we have with the euro dollar at the moment. So he's asking, what about the swap? If many levels open, what about the swap? Like, will it make the operation be negative, like the overall result? You know what I mean?
Yes. Yeah. So when we take this is the reason why we enter and we trade more than one currency pair, right? And the reason why we trade with more than one currency pair is because while one is trying to work its way out, we got the others that are generating profits. You see, we would never, if this was a case that we would be losing on one pair, and let's say, and again, if we end up taking our 20% net profit right here, and that profit really just squares out the amount of cost that we've had to carry that trade, we should have other trades that are making up that difference, right? And so that's why when you look over here on our trade copier, we don't make 106% by paying a lot of fees and not making profit. We're making 106% for the year is because we're trading with multiple currency pairs. So one that's stuck in a position, we're making profit on the other. And if you look at the results here, you can see that the trade result, you can see that we are paying. You don't see a lot of euro US dollar trades, but look at this: Swiss CAD, New Zealand CAD, Aussie CAD. So we've got trades that are running all the time. Look at this. So you haven't seen a euro US dollar trade for a while, and that's because we're holding that position. But you've seen a lot of the other trades are paying off. And so this is what they call diversification, right? You don't only, when you're investing, you don't only put your eggs into one basket, right? That's not the way you should be investing. You should be spreading your risk across different assets and different investment vehicles. We're going to call them currency pairs in the Forex. So we're going to invest our money in different currency pairs. And so if one is held up because it's in a drawdown, we don't want to be in a position where we are forced to cut our losses because we've got costs involved. What we want to do is we want to trade other pairs and generate the profits on those pairs while this one is trying to sort itself out. And that's how we manage the risk on the cost of the holding the position.
All right, amazing. Mr. Gary, I think that you basically talked, from A to Z of Pip Grabber. People is extremely happy. I'm gonna switch to Spanish right now, so if you want to hear me, you can, put interpretation.
So hey, BD family, I want to know how many of you are just as excited as I am. Please place a 7 in the chat if you guys are excited just like me. How many times have you guys been connected for an hour with the person, the creator of Pip Grabber, this amazing tool that has been helping everybody make amazing earnings? I want to know if you guys are excited about this tool. All of these days while I've been training, the more I talk about Pip Grabber, the more excited I get. So after listening to Gary, I am absolutely in love with Pip Grabber. I'm going to use it for the rest of my life because it's an amazing, amazing tool. So Gary, from the family of By Design, thank you so much for creating this tool. You are changing people's lives and letting so many people duplicate and expand their business and achieve their dreams. So everybody, please say a big thank you to Gary for his knowledge. We have almost 300 people on with us right now, and I know that very soon we are going to be thousands of people using Pip Grabber and making our dreams come true. So, family, I have a very big announcement. Today is a very powerful day because today we had Gary Fichardt, but you have no idea who we're going to be with this afternoon. So 4:30 PST, 7:30 Ecuador, Colombian time. We're going to be talking with Jacob Martinez. He is the CEO of MTI. And so if you've already learned about Pip Grabber from the expert, today, in this session in the afternoon, you're going to be able to complement by learning directly from Jacob Martinez, talking about the success and the results that they have had with MTI. So Gary, once again, thank you so much for your time. And I have no words to express so much what we feel. Thank you so much. Thank you so much. So once again, my name is Mateo, and I live my life by design, and we will see each other on the beaches of the world. Gary, thank you so much. I hope that all of you have an amazing day. I will see you guys tonight with the rest of your team. Bye-bye.